I'm going to be talking on something quite controversial today, and that is why traditional accounting advice is actually failing your business. And honestly, this is not your accountant's fault. It has, again, I'm an accountant, so I understand from both being a business owner and an accountant. When you're looking at the accounting side, it is rigid, and we have been taught frameworks and systems, and this is how it's done on paper. But as a business owner, a lot of those concepts on paper just don't make sense. It does not make sense for your business to thrive in the way that you want it to thrive. And that's why we're leaving those traditional methods to the side, so that we can focus on building and scaling a profitable business that works for you, that you understand, and where the numbers don't feel foreign. You're probably like, what is traditional accounting? Traditional accounting is compliance over strategy. So we're kind of fixated on making sure we're doing everything right for like the tax office, dotting all the I's, crossing all the T's. And that is such an important component, but it's very like boxed in, you know, we're only really looking at it in one dimension. And while tax minimization is absolutely essential for business and strategy, it shouldn't be the only thing that's discussed when we're looking at your business as a whole. Because if you're focused solely on minimizing tax, again, controversial, but if you're only looking at the tax minimization, you're doing your business a disservice, because all you're ever doing is focusing on how to make less money. So how is that helping you move the piece to reaching a 20, 30, 40 million, $100 million business? While it's a core component, it isn't the whole picture of the strategy. The second thing that they look at a lot is cost cutting over growth. So we kind of go in and we're like, well, you got to cut this, you got to cut this, you got to cut this. But what ends up happening is you're cutting, and you end up really leaning out your business. But then that puts all of the pressure back on you as the owner. And so what ends up happening is you take on that responsibility again and you go crazy, because you're like, okay, I've cut all the costs, I'm running really profitably, but I'm absolutely exhausted. I cannot keep going at this rate. And so we're not building sustainable businesses for the long run because you're burnt out. The third thing is that we actually look at historical numbers. So we're always looking at past data. What happened last year? And what that then creates is a reaction rather than being proactive. So we're always reacting to what happened in the past year rather than creating a strategy and looking at your future numbers to grow further, which I think keeps us in the rat race for a lot longer, because we're always looking back. Although it's not a bad thing to look back. You still do need to look back at your past numbers to see where the fuck you went wrong. But like, use that to move you forward. Don't use that as gospel, as that's all that your data is. And then come to the next financial year and you're like, I'm in the same position. So, and then the third one is ignoring that mindset component. The mindset of you need to be the core operator. The business cannot operate without you. It's running things, again, going back to running things so lean that you're shifting your way back into being the main operator of the business. And while you are the key driver, you do need to step into the CEO role, which a lot of small businesses don't do because they don't know how. They don't know what that even means. So like, I know for me, when I first started, a founder of a business, put all these titles there, but it meant jack shit to me because I didn't really know what that meant. But what that means is you are overseeing everything in the business. You are that person that's making key decisions to moving a business forward. So how do you shift from the outdated accounting advice that you've come accustomed to strategies that actually help you grow your business? So the first one is looking at where is most of your money coming from? How much is going out of your business? What are the services that you're providing? Getting really clear on what drives your business is going to help you grow your business. So you're going to build a scalable model. And that just means that you've got to look at your business strategy, what it's doing for you right now, where you want to go, so that you can create the mini stepping stones in order to get you to that next goal. Got to think of things in a 3 to 6 to 12 month time frame, and then from 12 to 3 years to 5 years. So always give yourself little moving pieces in order to scale your business up. The third is using the data to make the decisions. So your profit and loss, your balance sheet, your cash flow statement, all of these are still extremely crucial statements that you need to become very familiar with. But you need to take a look at the key components in each of those. You don't need to be an absolute expert in them, but if you're looking at your profit and loss, look at what's bringing in the most money, look at what's bringing in the most profit, and assess whether or not things can be left behind. So for example, if you're looking at your profit and loss, I want you to look at what you're bringing in, how many services you have, what the profit margin is on each service, and then from there, you're going to be able to cut or grow in whichever way it suits your business best. Your balance sheet is going to tell you the assets you have and the liabilities you have. And when we're looking at your assets and liabilities, the assets should be theoretically generating you more income. So the data in the balance sheet is what's going to help you make investments in your business. So that side of your business is important if you're looking to grow from an investing standpoint, whether it's you're buying more equipment, what's the return on investment on that piece of equipment? If that means someone else can go out and do a job while you're not doing it, then there's a return on investment. Your cash flow statement, I actually think, is the most important, because what we're looking at here is future projections. We're not looking at past, which the profit and loss and the balance sheet looks at. We're looking at data in the future. And we want to see how we can make more money within your business, what you need to do if you wanted to go out and buy an asset, how that's going to impact your overall inflow and outflows of your business's cash, because cash is literally the lifeblood of your business. It's the heartbeat. It's the thing that keeps it going. So without the cash, you're not going to be able to buy the asset, pay yourself, do all the things that you want your business to be able to do. So that statement there is what's going to help you be proactive. And lastly, we do need to shift from how much have I made to how much have I kept. So we're gonna look at strategies on how we can maximize what you're keeping in your pocket. So that means optimizing your pricing, planning your cash flow, and planning your tax, because that is still a key component that your accountants are going to help you do, and it is all a part of the overall strategy. Hopefully that helped you shift from the traditional accounting to a more non-traditional approach in business, and maybe it will help you communicate with your accountant a little bit better about what you want out of your relationship with them. So if you found this helpful, I would love it if you could subscribe, hit the like button, and if there's anything that you want me to answer or do a video on, please leave them in the comments below, because I'm here to help you.